Hi, I'm Rachel Dillon, and together with my husband, Marcus Dillon, we lead Who's Really the Boss podcast, where we highlight the joys and challenges of running a business with your spouse or family. Our mission is to strengthen families and businesses by helping listeners avoid the mistakes we have made so they can lead and live happily ever after. Welcome back to another episode of Who's Really the Boss podcast.
Hey, thanks for having me back.
It's just the two of us for this episode.
Just the two of us.
You have all of the notes. Like, I am so impressed. Is this a new initiative for 2024 that you're actually going to prepare for things ahead of time, or what's going on here?
Well, this episode or this conversation is about the financials. So I'm just like any other good CFO going into a meeting. I'm fully prepared. And what I was thinking about in this episode, where we're gonna share numbers, right? Most business owners should probably also do this with their spouse, once a year or multiple times a year. I don't know that you care about some of this stuff, but, as CFOs, sometimes Leslie and I are part of those conversations where like a spouse is present for like one of the meetings per year, but not all of them. So I think it is good to know the status of the business, whether it's healthy or whether there's improvements that need to be made. But yeah, that's what we're going to talk about today. So
I love it when I asked you, like, what are all these notes and papers that you have today? And you're like, I met with my CFO yesterday. Get ready for this.
I put on my CFO hat for DBA and my whole team of three, really, because, there's so many of those team of three roles that I have not given over to others in our business. So I put on multiple hats yesterday to be ready for this conversation.
Nice. Well, so this episode, we are going to go over lessons learned in 2023. So lessons learned in our previous year from the time we're recording this. So did you reflect on 2023 at all?
Yeah, there's like the end of 2023 for me, I'm kind of in a funk. And even starting 2024, that's a whole other podcast conversation or conversation over drinks, coffee, whatever that is for those that want to know. So I actually spent some time myself looking back over 2023. And what I did is I sat in a comfortable chair and looked at all the photos that I had on my phone going back from January through December. And my attitude changed. It's one of those where it's like, no matter how you end the year or what uncertainty remains, it's like 2023 was a pretty good year. We traveled a lot and we got to accomplish quite a bit, personally, as a family, professionally, all that good stuff. And that will help drive some of the 2024 decisions we have to make and get really clear on that. And so the same can be said on the financials, kind of what we'll go through today with the business and how we stand there. But yeah, even personally, like I spent some time, individually and just reflecting that way.
I love that your approach was to go through the pictures. I also did. So as a business, we had our retreat in December, like the first week of December of 2023. So we had gone back through like business achievements and progress on goals in the business and initiatives that we had started and finished, or initiatives maybe that we had talked about and not finished. And so we had done that from the business perspective. And so about a week ago, I went through, and I didn't go through my pictures or my camera roll on my phone. I went through my calendar on my phone. And so I just went back to January of 2023 and looked at all the things that had been on the calendar each month, and reflected over some of those things. And one of the things that I noticed, I think there was only 1 month last year that I didn't fly somewhere.
Okay.
And you flew that month. I just didn't go with you.
There's months where I flew multiple times.
There were months that we flew multiple times, but I think when we were much younger, less gray, fewer wrinkles, we always said we wanted to travel. That was not something that we had done growing up, like with our families or with our parents. And so we said we wanted to travel. And now I'm like, it's actually a reality. A lot of those were personal trips, and a lot of those were related to the business. So it's a lot of fun, but
I can make every trip related to the business in the eyes of the IRS, but yeah.
It's easy to forget. It's easy to forget about what you did. I felt like from January through June was more than a year ago. I couldn't even place those things that we had done and had happened in the same year of 2023. I really felt like it had been much longer. The 6 months, most recent 6 months, that's easy to remember. But before that, it felt like a completely different time.
Yeah, for sure. Yeah. So excited. I tried to prepare, so this would be a good episode. I know a lot of people are interested in real numbers, and I am as well. So when I see influencers or people posting on LinkedIn, I do my due diligence. I kind of dig in to see like, okay, does it really work for them, everything that they say? And then so many times I've been disappointed where it's like, and this is going to sound bad. It's just like they're a solopreneur. They are doing everything in a bubble. They, have a very small team. They have only a few clients, and we're not. Like, we run a firm. Like, everything that we do is vetted through a lab, so to speak.
So when you say those things like a solopreneur that has only a few whatever, but we're also looking at that because you mentioned that's from some type of social media platform.
Correct.
Where there are most likely tons of followers, connections, tons of views, maybe a lot of comments and interactions on social media. Looks very different than maybe our social media looks. And then also their actual business looks very different than our business. So kind of in looking at those things and why you go back and like vetting these people and what they do and what does their business look like, we really have to pay attention to what advice and what strategies and solutions that we're trying to take and implement, and how they would actually work in a firm that's very different than maybe the one that's being described or shown.
Correct. When you say advice, you can expand that to be structure, strategy, software, all of those different things that are so key in every firm. If you don't look like that firm, maybe that's not the right solution for you. And so that's just where we're at. I mean, and that's why I think that we're called to share this data and kind of our experience. And I'm excited to do so.
Yeah. So for Dillon Business Advisors for 2023, let's start with the top metric, the one that's
vanity
easiest,
metric, yeah.
The one that's easiest to point to find, and the one that usually captures the attention of most people. What was top line revenue?
Yeah. So I say all the time that we're a $3 million firm. I always say 3 million just because that's an easy round number. We are on track to get there in the next few months, just rolling 12-month average. But we ended the calendar year of 2023 at a revenue of $2.823 million. So 2.823, it was a 7% increase over 2022. So we ended 2022 at 2.639. So even, 2.639, that's a big round to 3, but 2.823 is not as much. So, and then rolling 12, we'll get, we've gotten some big wins, which we'll talk about. And, just the way that the business is structured now, I assume that we get to a rolling 12 months of 3 million in March or April.
So let's keep going and break that down a little bit further.
Yep.
So that number is fine. For some people that might feel like, wow, that's a lot. And
that's
for other
total,
people that might feel like, that's it. That's all, that's
exactly.
all you do. And so let's give that number a little bit more context. So how many team members make up that or are supported by that revenue?
So when we started the year, that 2.638 or 2.639, we had the equivalent of 15 full-time equivalents, full-time team members. That was about 20 people because we have part-timers mixed in there. We had more part-timers last year than we do now. The way it worked for 2023, that 2.823 was with 12 full-time team members. And that's counting you and me as full-time, which that we're very fortunate to structure the business the way we are. I looked at my billable time for 2023, which it did go down. So I had 350 billable hours. So only 350 of billable hours. I work on different projects, I am always doing something as it relates to the business, but client billable work was $350. And I feel like that was a good balance. We have had some transitions in different roles. I'm expecting that to increase a little bit, especially the first 3 or 4 months of the year where I've got to help a little bit more on the tax side this year. So I'm preparing for that to go up. But overall, I still think I'll be below 500 on the year. That's still my goal, is to be below that. And, we've seen that from whenever 2017, which we talk about a lot. 2017, my billable production was probably 1,500 hours, and probably worked 2,500 to 3,000 hours a year, all in. But yeah, whenever you kind of take that into account, we've got of those 12 FTEs, we've got 3 or 4 people equivalent that are just straight admin, like not billable, not production. So we are structured, in my understanding, as a single owner firm. We're very efficient. We are very profitable, which that allows us to do things for our team, kind of continue to give a very high level of service for our clients. And I'm proud of the number that we hit for 2023. I know that may be smaller than some. I know that may be bigger than some, but I feel for the makeup of where we're at team-wise, what we have learned, and then also the amount of effort that it requires from me or from us, I'm really happy with. I think that we lead really good lives. It provides enough cash flow for what we want to achieve in life, and I'm happy with it. So there's a lot to celebrate in that. The other thing, and before I let you talk, so we did 2.823. Our ending accounts receivable at 12/31 was $400. So like, that's the other thing, right? Like, to have $400 of accounts receivable at any given time of the year, but at the end of the year, only $400 for a $3 million firm is incredible. And I talk to a lot of CPAs. I talk to a lot of other businesses. That's just not the case most of the time.
And if you're watching us on YouTube, you can see that I'm smiling so much about that. And it has nothing to do with numbers or the amount of money, and everything to do with, I used to have to make collection calls when we had accounts receivable. And I, 1, did not like being the bad guy. But 2, didn't like to hear the excuses of why people didn't want to pay us for a service we had already performed and that they were happy with. It wasn't even that they were dissatisfied with what we had done. They just didn't want to pay because they didn't want to see that money exit their
It gets even better. That $400 is one invoice from a former client, and that invoice is 3 years old, and we've got him on a monthly payment plan paying $50 every month on the 15th. And I am so determined to run that through with interest.
Which is kind of crazy that you aren't more determined to just have zero.
No,
AR.
it's premise. It's premise. That $50,
keep
like
the $400.
Yeah. And that was an annual tax client. That goes to show me, like, that's the picture on the balance sheet wall of why we no longer do after the fact billing for annual clients. Like, that's just not the reason. So.
All right. And so I think you said 7% increase.
Yeah. So 7% across like total revenue. So the other kind of asterisk in all of that is we sold off clients last year, exited clients, about 150. I think it was a little bit more. So it's probably at least 150,000 of annual revenue went out the door. So of that 2.639 last year, 150 of that we didn't come into the year with it. It was sold off. And so if you take that into account, our growth was much more. Breaking it down by like CAS growth, CAS is up 25% year over year. So that business line has grown. It's 2/3 of our total revenue. We still have some tax clients that we serve really, really well that are the other third. But our tax revenue went down because that's what we continue to decrease every year, those tax relationships. So
that increase, yes, that's exactly where I was going with that point, was that we had actually sold off some of the business. So we identified another CPA in our area that is continually looking to grow his tax firm and wants to serve clients.
Correct.
Really good clients from us. We have held on to them all these years. If you haven't listened to previous episodes, we have an episode on how we've done 12 M&A deals, and it kind of goes through how
13. We did the last one in December. We sold off some more clients to that guy.
That keeps going. And so we outlined what that looks like and how we've done that, how we identified buyers for those clients, how we helped communicate and transition those clients for a successful transition. So haven't listened to that, go back and listen. But then we also have increased our client accounting and advisory clients. And what that looked like for 2023 was actually 17 new clients. So I don't know. I know people
flip to my other pages, right? So
I know I hear people talking on the internet, right? On the line.
On the line. Yeah.
Talking on the line about growing and just that, they're inundated with calls and messages about new clients and all of these things. For us, what that looked like was actually accepting 17 new clients to help facilitate that growth. So if we divide that over 12 months, it is not a crazy amount. We are not onboarding 50 clients a month or 20 clients a month.
That was the goal at one time.
I mean, maybe, but never, because that would totally break everything. Our processes and kill our people, our team. And we do not want to do that. And anytime I hear somebody say they're doing that, it almost breaks my heart, because I'm like, I can't imagine if that is what is really happening. A different size firm, yes. A much, much larger firm than we are, yes, obviously that makes more sense. But for a firm that seems similar to ours, I can't imagine.
Yeah. So 17 new clients. You got another in December. So it was actually 18 clients, right? Right at the end of December. After we closed it, we're going to give the team that one as the January start, which was a great one. So 17 new CAS businesses. There's a couple asterisks in there. 2 of those are no longer clients anymore. Like, they just weren't good fits.
So came in and went out in the same
correct
in the same year.
So we've kind of isolated those. So 15 net, right? And then we've had some churn of people that have left for whatever reason that weren't part of an exit.
Sold businesses
correct.
That were good for them. That is
exactly. We wish them all the best.
And what we were helping them to achieve.
Correct.
So that's
some had economic uncertainty where we actually, stepped out of the business to where we left them better off because of soft economy for what they do. So of those 15, let's say, net clients, that's 10 additional family relationships, because some of those are group, a couple of them were clients we already worked with that started new businesses that we then spin up a new service offering. And then there were a couple of families that came in with multiple businesses that we structured. And so, with those, it's a little bit different. So, the total, the 17 clients that we brought in, the average for those, the new monthly average on those was $22.35 per month. That is an additional total MRR $33,525, total ARR, annualized revenue of $402,300. And the other asterisk here is that does not include implementation fees. Right. So for every additional new client, we charge an implementation fee of $7,500. So we had about $150,000 of one-time implementation fees that helped grow the CAS business in 2023. That's in that, our total revenue number. And someone was asking me the other day, why are we still focused on growing that so much? It's because we can delegate within that business line. So within CAS, to grow it, we can delegate that to different levels of team members. And we're not looking for only team members to come in at the higher levels. So manager and above. Yeah. We can continue to grow CAS really steadily with base level employees, CSMs. And so CSMs do great work, and then support controllers, and those controllers support CFOs and all of that good stuff. So that's why we think that we're onto something here, because we have shifted from a top heavy organization to be more of a balanced pyramid organization where our base level employees are the ones that are killing it. They're doing great work.
Yeah, and I like the way that you said that as far as like why are we still pursuing this? Why are we
Yeah.
still growing this? Why are we still doing this from that staffing or team member standpoint? From the client standpoint, because that's what they are expecting. I think so many people, when they reach out to an accounting firm or hire a CPA, they're hiring somebody who is experienced and credentialed. They are expecting the advice. So thankfully, we have put together a way that we can offer that while being compensated for it. I think that's the biggest hang up, is that a lot of people, they don't really understand, well, how do I do all of that for them? How do I get compensated for my time? And so I think but the main reason that we're still, I guess, able to continue to focus on that service offering as far as client advisory and accounting services is that the clients want it. They value it, which in turn makes our team members value their positions and find fulfillment and satisfaction in their job, and not just how many tax returns did I complete this year.
Yeah. And the only way that we could have achieved these numbers, the only way that I can not work billable hours is this way. And, it's that, like, having the team in place, having roles and responsibilities, being able to delegate throughout that team and not building something around me. I mean, our name is still in the business, but you're maybe in a pod and never speak to me, and be served by people. So there are clients that I have never spoken with that pay us good money, every month. And so something to be proud of. And
So let's talk through, you mentioned also about our kind of full-time equivalent or FTE count from 2022 to 2023 was different, or ending 2023 was different. So let's talk about some of the roles and some of the learning, some of the things, so talking about lessons learned in 2023.
Yeah.
So let's talk through some of the learning related to positions.
We started the year with 20 total team members. It was 15 full-time equivalents and heavier admin, had a sales team as part of that. And then we ended the year we have 17 team members today. 2 of those are very part-time contractors. So we have really 15 and 12 full-time equivalents at the end of the day. So, with 2023, because we were able to, as far as a year of abundance, like great bonuses to the team, great raises going into 2024, we're able to do, the 401k match, the profit sharing, and the cash balance plan, max all of those out for everybody. So it's one of those, like, so much to celebrate, right? When doing those calculations, we have 8 team members that were on the bus at some time that aren't on the bus now. So I think 8 team members rolled off. We added back, I do the math, like 4 or 5, right? Mm-hmm. 4. Yes. So that's the hard, right? Like, whenever you look at the team picture, the family portrait from last year, and there's so much change there compared to the one that we took in December last month. So, like, that's the emotion behind the numbers that you kind of have to work through. So we learned a lot in that, and what we share with firms, like and other businesses, it's the good and the bad. Like, hopefully you only learn, and we're only going to, like, share things that work that we would recommend, like team of 3 and structure and all that, like, been proven to work, like, no doubt in my mind. But some of this other stuff, like, let us go take the hit on it first and, like, see if it makes sense to do it with inside of your business, because, like, we're willing to take those risks, but we may not be willing to share that with you so early on in the risk.
A lot of those experiments that we do, we do try to be transparent about everything, especially with our industry peers, with our accounting friends, to be very transparent. And so if we're trying something, but it's not proven yet, we will likely be very quiet about it until it's proven, because we don't want someone to have to make a mistake that doesn't work. What we noticed with our sales team, 2 people who we love very much in and outside of the business, before they were part of the business, now after, is just that we were adding the same amount of new clients with that sales team and without. So prior to and then after. So a lot of things that we tried at the end of the day, and potentially because our name is still on the business, it ended up being that a lot of the conversations that were being had and the referrals that were coming in, how we were getting new clients, didn't really change by adding 2 new positions into the firm.
Yeah. So our experience on that sales team, it was a total of 3 people, 2 full-time going into 2023, 2 full-time, very high-level leaders. Just the people alone, the salaries. Over 2 years, we spent $600,000 in salaries. And that's a lot to recoup in new clients, especially what we have seen since no longer having the sales team. The clients that were sold by that sales team had a different level of understanding of what we really do, and are now some of the clients that are churning out because they were sold. They were incentivized, like there's incentives to get onto the bus, and then so things were accepted outside of scope. Non-ideals were maybe accepted. And so those are the people that, as we continue to refine and know who we are and know who we're called to serve, don't fit. And those are the ones that are churning out. So it was a lesson fully learned, but there are some additional costs there. But yeah, salaries were $600,000, alone.
Yeah. And other team members that are no longer with DBA, they were various reasons of why they're no longer with DBA. Only 1 or 2 based on not having the right skill set to fit the need of what we wanted or needed within DBA. Some others to seek outside opportunities that are just a little bit different. And I would even go as far to say bigger than something they could accomplish in DBA. So just different than the vision or goals of where they were going in DBA. And then others like health reasons or family choice reasons as to why. And so we have been able to celebrate each of those and what they did while they were with us in DBA, but also some of the resources that we now share in DBA firm for other firm owners and firm leaders, we have in place because of some of that. So like our team member scorecards and our team of 3 structure, the roles and responsibilities being laid out and visible, documented for people to have, some of the processes that are documented, all of those are part of that team focus and like team member retention and growth and things like that. And so definitely those come from why do we have all of these resources and things that we're doing? Because we've learned from things that weren't working. When we eliminated the positions of the sales team to kind of scale back and get things maybe back in line with what we actually wanted to do and what felt good for the business and the team members and to current clients. Like that's the other thing, that we have to continue to serve our current clients very, very well because they are our biggest advocates. So definitely wanted to do that for them. And so when I did step back into the sales piece, we talked different ways of generating leads. So we took off a lot of language off of our website regarding tax. And I think a lot of people, when searching for a CPA, that's their initial thought, is that I need a CPA because I have tax filing requirements. So where our website on its own, doing nothing, just sitting out there all the time, used to generate a ton of calls, they weren't the right calls. They were a lot of my time for a lot of wrong fits, a lot of referrals out. So we looked at some different alternatives. So some of the initiatives that we talked about doing were being more active on LinkedIn, to start posting YouTube shorts, because we know a lot of people go to YouTube for education. Short form content is very, very popular. We have no attention spans left. But we also put in place a lead generating company. And what they did was, instead of me doing it, we outsourced it because I don't do it, sending out basically like cold emails and cold calls and generating first conversations for me that I would then take. So we had, online digital calendar that they could book through, but this outsourced company actually had people calling, like a call center, and asking to talk with, the business owner. We identified industries and revenue size, team size,
geographic
location. So we put a lot of parameters in place, and we did get a few calls scheduled. Even with that, not one ever converted to an actual client. Yeah. Some did lead to a second meeting after my first meeting with them, but majority of them, those meetings were going before we really said.
So it was about $24,000 invested there, 24 to 30 after on ramp. For
that
6
feels
months.
like high. That feels like high, but maybe it probably was.
Yeah, no, I think so. So just something to think through. The main thing with that is our best prospects, our best clients are all relationship based. And so even though we've narrowed focus and only serve certain industries and, certain size of clients, every on the list of 17 to 18 new relationships, I would say majority are all personal introductions given existing relationships. So, and that's just, it's hard because we're a relationship business. There's a lot of trust. And you mentioned we definitely make our clients more money in certain situations. We also allow them to have more of their time back in other situations and are there just as an advocate, a resource, a sounding board a lot of times. But yeah, I mean, so many of the things that we tried in 2023 were great learning experiences and investments, but experiments that we've chosen not to pursue any further.
Yeah. Some other things outside of sales, more operations of Dillon Business Advisors and client focused, Onvio trial balance. So that we may have been late to the game on that or early to the game, or maybe people use other solutions.
I mean, so we tested out with both controllers, and then when Charles was still in place as our tax director, we tested out different trial balance solutions to import data from QBO, which is our platform that we use for accounting, to Thomson Reuters UltraTax, which is our platform for tax preparation. So we tested Tally4, we tested Onvio TB, and I think there was another one in there that we tested. Ultimately, we were already on Onvio, so we were just using Onvio TB for that. We did that for all of 2023. We'll still use Onvio TB for the tax season of 2024, but we will look for a new solution after that, as far as the connection, the link between QBO and UltraTax. And the reason why is because we are moving off of Onvio, because we were using Onvio for time capture, for project management. We never build out of it. We never use the portals there. We didn't use their file structure. So TB was good to use. It was like we were actually using Onvio, and we thought we were going to go deeper with Onvio, but it's just, the further we got into it, it was like, this is not going to be a long-term solution. And some of the other technology updates with our softwares and AI that we didn't see coming down the pipe with the Onvio suite. So we actually switched over to Canopy, have kind of told a little bit about that journey and implementation, and shared resources out there about Canopy on how to set it up. We are now using that internally with the team as of December Q4, and then we will roll that out to clients after April 15th. We will start using Canopy for external use as well. So for client sending things like that, signatures, different items that we can use there. And we wanted our team to know that software before they had to answer client questions about that software. So that's just the natural progression. So after tax season, we'll release that to clients on that side.
Yeah. And then I know one of the other big initiatives or new initiatives that we started in 2023 was DBA Firm and sharing resources that we have used within our own accounting firm. So things that we use daily or have used to get things set up and get things started, we are sharing. And that initiative actually started as far as helping our peers in the industry and making a difference in the accounting industry started back in 2022, that we listed that as a team initiative and not just a Marcus or a Marcus and Rachel initiative. And so
I mean, it started in 2020, earlier than that, it's
2022 as a team initiative.
Sure.
where we really saw that, yes, we want to help and we want to lead and we want to share with others what's happening in DBA. But DBA is not just Marcus or not just Marcus and Rachel. I mean, we do very little now compared to what the rest of the team does. And so bringing them in and letting them be a part of that to be able to connect and share with other accountants and peers what they do day in and day out, how they solve challenges that they encounter on a daily basis.
Funny story. I was on a very similar call yesterday with a friend of mine who owns a firm in Arkansas, and he was asking me how we use this software. And I should have just told him, hey, I'm not your guy, talk to so-and-so on our team. But I, he's a friend, and I showed him everything. And as I'm opening up the software, it's downloading all these updates because I haven't opened up that software in 3 months, and 4 months. And so it's doing all these uploads, and I'm it shouldn't be this slow, and trying to, fumble my way through it. I did a pretty good job, but yeah, that's just a progression as people want to know what we're doing. We have had some success. I think we're very appreciative of all the clients, all the team members that have led to that success. And as part of that, we feel we're called to mentor others and to share, what's worked, what hasn't with others. Not only you and me, but people on our team also have that same calling on their heart. And there will be more of that in 2024. And I think it's just a natural progression in conversations that we've had over all these years and questions that we've answered. And now we're just able to do that in a very, in a way that allows us to have open conversations at multiple times with people as opposed to just one-on-one, So I think that's the piece. That's obviously Firm Resources is an entry point into that, and that will just continue to progress naturally. That out of everything that we've done, at DBA and everything that I've probably done in my career, I feel that's probably the most stretching, the most growth oriented, is actually helping others. And I think it's just going to be fun to see how it progresses.
Yeah. So those free resources that we share, they're on our website. So at DillonAdvisors.com, we have a page titled DBA Firm. And really the reason to go there is to look and see if you're interested in how we, grew our revenue with fewer people on the team, with fewer clients actually under our care.
Yeah.
So those free resources that we share, they're on our website. So at DillonAdvisors.com, we have a page titled DBA Firm. And really the reason to go there is to look and see if you're interested in how we, grew our revenue with fewer people on the team, with fewer clients actually under our care. Yeah. Is to go there and sign up for those free resources. When you sign up for free resources, it's just to get updates when something new is released, and then also to allow you to go back and download whatever's already there. And then just anything new that we're trying out or have tried out. We won't throw it out there until we know it's somewhat successful.
Yeah.
But we're happy to share that with anybody who wants to learn.
It's funny because people reach out and they know we're doing stuff with certain softwares and things. And they're like, hey, have you written the workflow for this yet? And then we're like, not really. It's we're still in the testing phase of what that looks like in our firm. And DBA Firm, and Firm Resources, this is only stuff that we use. We're not trying to, be an industry publication or somebody that,
we still have a full business to run as far as DBA. So really this is just byproducts of what's happening at DBA. So I think that's one way we're able to manage that
Yeah.
currently.
So this is just showing you like, hey, this is what we're using. This is how we're using it. Like, if you come to us and say, well, why didn't you use this other practice management software? And it's like, we looked at it, but we're not up to date on what that one that we chose not to use is currently doing. Like, we just don't stay in it that often.
So let's save DBA firm for a whole nother episode. It can get its own airtime. Anything else that you feel like other CPA firm owners or leaders would like to know? Maybe that feels like, I don't know if I want to share it, but that they would like to know that we haven't already covered.
Going into 23 with the team that we had, I may have said this in an earlier podcast, already talked about like how we were shifted. Our administrative team, including the sales team, that payroll was more than the production team. So like there was an imbalance in the firm. And so we had to make things right. We did that at the end of Q3 or at the end of Q1, it kind of bled over into Q2 a little bit. We are now back to where we want to be. And so the way that we structure, I don't know if we've ever talked about this, but we do a modified version of profit first accounting. And so we're back where we need to be. So we have a deposit account, a profit account, a tax account, and an operating account. Duh. So the way that it works, every dollar that comes into DBA goes in that deposit account, and then I move money a few times a week. So we're back to where we want to be. So I move 10% to the tax account. You got to pay the tax guy first. I move 20% to the profit account, 70% to the operating account. So that's our 100%. The other thing that I do, just because of the calling on our life and our faith, I immediately take 3%. And I pay it to the church, and I do that with credit card, and I get points for it and everything like that. Don't judge me, but it's I fell out of that habit in 2023, early 2023, and now I'm back into that habit, and it's just paying our tithe immediately. Like it's not bigger numbers. Like, if you always say like, hey, I'm going to hold it back and then pay it out in big chunks, that never happens, or it's more of a blow to your cash flow because you waited to do it. So we are back to that 10, 20, 70, 3, and so if you think about like profitability of a professional services firm, a third, how that works. That's kind of how we do it. Right. And so, if that helps anybody else, that's been helpful for us, and things are in the right buckets, so to speak. So we run the business off of 67% of every dollar that we run, and that helps achieve everything that we want to do for team members and the growth of the business. And we feel that we're being good stewards that way. Beginning of 2023, I was dipping into savings. I was dipping into that tax account way more than I wanted to just make payroll. And so it was an uneasy situation at the beginning of the year. And now we're back to where we need to be, back at the right percentages and all that good stuff. So that has helped us run our business. Like, just, you don't even have to think about it. You don't have to think about even the tithe. Like, it's done, and you don't have to like play games. So I would recommend that to anybody thinking about it.
Yeah. Well, thanks for sharing. Thanks for preparing so that we had real data to go off of, and not just kind of what we feel like or what we think is happening. And if this is helpful to anyone, and a listener would like to have a follow-up conversation or know more, maybe we didn't share something that you were wanting to know, feel free to reach out to us. We're happy to share anything. Well, thanks for this conversation. See you on the next.
All right. Thanks.
Thanks for hanging with us to the end of another episode. Leave us a review with your thoughts, comments, and feedback on Apple Podcasts or Spotify. Be sure to subscribe to our podcast so you don't miss any future episodes. Join us again next week for another great conversation.